Alright everybody, hope you all doing well. Hope you guys had a good Thanksgiving. So in this video, I'm going to show you guys my 4 keys to trading a good squeeze. So not all squeezes are created equal, and when it comes to trading, what we want to do is just kind of narrow our focus to trading nothing but clean setups. So I'm going to show you guys 4 little keys to making sure we're picking good looking squeezes. So before we get jumping in, let me show y'all trades here. So I'm in Thinkorswim in the TTM Ameritrade account, and if you look at last week, guys, closed gains of about $12,000. However, that's off by about $3,500. So really, show you guys the spreadsheet here. Here we go. So this most recent week, guys, the week of the 23rd, closed $8,600 of profit, and then the week beforehand closed about $4,000. So just about $13,000 of closed profits over the last couple of weeks. And Thinkorswim here is showing closer to $12,000 for last week. For whatever reason, on one of my credit spreads on Tesla, it's not taking into consideration what I lost on the long option. So what's coming across as a $4,000 profit is more like a $500 profit. So we take away about $3,500 or so from the $11,900, and that's bringing us here to that $8,600. So just for transparency, I wanted to show you guys that. And before we get jumping into the lesson here, if you guys want to keep tabs on my trades, entries, exits, you can follow me on my Twitter account at FTM Alerts. Look for T's trades, and then if you guys haven't already, definitely check out, put the link in the description for this. The folks at Simple Trading put together a really cool package where you guys can get the Squeeze Pro indicator and a couple of other awesome indicators for a really good discount. So make sure you'll check that out. And with that being said, let's get jumping in here. Alright guys, so 4 keys to trading a clean squeeze. And before we jump in, I wanted to throw this in here. Our job as traders is to trade clean setup after clean setup over and over and over and over again, working the numbers. And what I mean by working the numbers is, over time you come to the realization trading is just a big game of probabilities. So when we focus on really clean, really good looking setups, more often than not, they're going to work in our favor. So it's just our job to kind of work the numbers and let the probabilities play out how they may. Manage the winners, manage the losers, but that's our job. Trade a clean setup over and over and over and over again. And if you do this, the money takes care of itself. So the 4 keys to a clean squeeze, nice and simple, guys. The first thing I'm looking for is that the stock is in a daily squeeze. Second thing I'm looking for is that the exponential moving averages, the EMAs, are stacked positively. Third thing I'm looking for is that the stock is trading above its 21 EMA. And the fourth thing I'm looking for, which is really important to me, bullish momentum is increasing on the histogram. So keep in mind, guys, I'm talking about setups here that we're looking to take along. So naked calls, put credit spreads, debit spreads. It's a bit of a different discussion and a bit of a different, pre-flight checklist when we're looking for short positions. So just keep in mind as we're going through the rest of the lesson here, I'm talking about setups that we're looking to take them to the upside going long. All right, numero uno. I'm looking for a stock in a daily squeeze. A squeeze helps us identify that moment in time where a stock is chilling out, taking a breather, building up energy, and preparing for its next move. Once that energy is released, we want to be there and we want to be positioned to enjoy the ride. So finding a squeeze just simply helps us find a stock that has a growing probability, not a guarantee, but a growing probability of making an above average move sometime soon. So if we're looking for nice momentum driven moves, just focusing on daily squeezes I think is really, really helpful. The second thing I'm looking for outside of a squeeze is that the exponential moving averages, the EMAs, are stacked positively. When you have the EMA stacked positively, and what that means, guys, is that the A EMA is on top of the 21, which is on top of the 34, which is on top of the 55, which is on top of the 89. Now, this does sound like a lot, and I'll be honest, this is something I ignored for a long time. I've been trading the squeeze for what feels like forever now, and this was something I always ignored. However, continue to hear John Carter, the creator of the squeeze, talking about it. I did start to implement it earlier this year, and I definitely do think there's some value here. I'm finding that when I do focus on trading squeezes where the EMAs are stacked, it tends to work out a lot better. So this is part of my focus list now. It's the second thing I'm looking for. The third thing I'm looking for is that the stock is trading above its 21 EMA. The 21 EMA kind of serves as our launching pad. And oftentimes, big explosive moves tend to start at the 21, and that's where we want to aim to take our entries. And keep in mind, guys, other couple side notes here. What I'm looking to trade is that nice daily squeeze where I'm looking to take my entries near the 21 EMA, and all I'm looking for, is a nice healthy 2 to 3 ATR, average true range, 2 to 3 ATR move away from the 21. At this point, the move is typically over, and that's the only move I'm trying to catch. Of course, we think of Tesla, we think of Roku. There's plenty of examples of stocks that run 3, 4, even more ATRs away from the 21. But in terms of probabilities and as far as making a living as a trader, I think finding that daily squeeze, taking an entry near the 21, and just looking to catch that nice, clean 2 to 3 ATR move is a pretty good game plan. So the third thing I'm looking for, stock trading above the 21 EMA. And the fourth thing I'm looking for, guys, using the squeeze indicator, is those light blue bars, that bullish momentum building on the histogram. So if we think of that 21 EMA as our launching pad, getting that bullish momentum inside the squeeze as the stock is resting right on top of the 21 is kind of like that rocket firing up the engines. We're sitting on the launching pad, and that bullish momentum building up oftentimes is all we need to get that rocket, or the stock in this example, starting to rip. And again, we're looking for that 2 to 3 ATR move away from the 21, and then we lock our gains into the strength, and we're moving on to the next one. So, all right, so just to recap here, the 4 keys to a clean squeeze. We're looking for a stock that's squeezing on the daily time frame. We want the EMA stacked positively. We want the stock trading above its 21 EMA, and we want to have that bullish momentum building up and increasing on the histogram. So with that being said, let's look at a couple of examples of squeezes I've traded over the last couple of weeks, and we'll look at a couple other examples of some squeezes that are really clean and some that aren't. So one of the squeezes we traded last week was Twilio. Now this is a quick trade. I took the entry on, Wednesday? No, when was the market closed? I took the entry on Wednesday and got rid of the position there, guys, on Thursday. So it was a really short trade, good for about $820, but we traded Twilio because it was a clean setup. So think about that pre-flight checklist. The 4 things we're looking for. We had a stock in a daily squeeze. The exponential moving averages with my indicator up here, they were stacked positively. We were above our 21 EMA, so we're on the launching pad. And if you look at the histogram, you're building up that bullish momentum. So those rockets are getting turned on, and we're getting ready for that move. Now, this is a short trade, and while the stock could certainly continue to go, I'm sure it might, I was happy with the quick gains. So Twilio was a good old clean squeeze. Another one that the group traded really well was Roku. So Roku fit the bill here. You got a daily squeeze, your stacked EMAs were above our 21, and bullish momentum just continuing to build on the daily chart. That led to a beautiful move. So a nice clean setup. Another one, everybody's favorite, Tesla. So Tesla loves doing this. It goes into a daily squeeze, and then you get a catalyst, and it just goes crazy. But nonetheless, it was a good clean setup. Daily squeeze with stacked moving averages. You got bullish momentum coming in as the stock is above that 21 EMA. So there was a good example. And then one more here, guys. Let's see. We got a couple we can think about here. Let's take a look at this sheet. Let's find one more example, the one that we traded here. FedEx. Now, this is an interesting one. FedEx actually hasn't really fired the squeeze. But this is why it's important to me, guys, to take an entry near that 21 EMA. So we got a clean setup, stacked moving averages, daily squeeze above the 21 EMA, and you got that bullish momentum coming in here. However, notice that the squeeze didn't really fire. We still were able to turn it into a profitable trade because we're taking entries near that 21 EMA. So we actually, in the group this week, or over the last couple of weeks, had 2 trades here in FedEx. The first one, we're taking our entry and just simply riding that nice clean push off the 21, locking up gains at resistance. You get another reversion to the mean. We took another entry, same thing, playing that nice push off the 21. So Roku, Tesla, Twilio, FedEx, a couple of examples of some good clean squeezes we traded over the last couple of days. But let's look at some examples, guys, of squeezes that, if we're looking to buy calls, do a put credit spread, a debit spread, if we're looking to take a long position, let's look at a couple of squeezes that don't quite fit the bill. So one that comes to mind is Home Depot. Now you have a daily squeeze, but you don't have stacked moving averages. You are slightly above your 21 EMA, but look at the momentum on the histogram. It's bearish. It's leaning to the downside. If I'm looking to go long, that's not a clean example. Another ugly one is Procter & Gamble. So you have a daily squeeze, but you're well below your 21. Check out the momentum. Starting to lean to the downside, and you do not have stacked moving averages. So another example of a squeeze, but not a clean one, not one that really puts the probabilities in our favor of catching that nice move to the upside. So you got Procter & Gamble, you got Home Depot, and then another one here, guys, let me get this, was Netflix. So with Netflix, you got a daily squeeze, but if we're looking for a long position, it's a little bit less than ideal. We're just barely getting back above the 21. We don't have any bullish momentum, and you don't got your stack moving averages. So it's a simple little checklist, but I'm really trying to be picky here, and I'm only focusing on those setups where I believe the probabilities are just really stacked in my favor to catch that nice 2 to 3 ATR move off of the 21. Now look at Netflix here. Look what tends to happen when you get a daily squeeze, when you got your stack moving averages, when you're above the 21, but most importantly, you got that bullish momentum coming in. It tends to lead to that 2 to 3 ATR push away from the 21 to the upside. Right now, you're really lacking a lot of, call it those better elements that we're looking for. So those are some ugly examples. Let's take a look at a couple of clean ones that I'm personally looking to trade here, potentially, over the next few weeks. All right, so the first one on our list is FSLY. Now, it doesn't have everything we're looking for. It's a nice daily squeeze. You're above your 21 EMA. You have a lot of bullish momentum coming in here, but you don't have your stack moving averages. So it looks really clean, but this is where the discipline comes in. And believe me, this stock might go on ahead here and make a nice move, and we just might not participate. But we've got to be really strict here, and all we're trying to do is just every trade we take, have the probabilities in our favor as much as we can. So that looks good, but it is lacking a little bit. NOW, on the other hand, this is a nice clean setup. Good looking daily squeeze, you're above your 21 EMA, you got nice bullish momentum starting to build here, and you got the stack moving averages. Another one is Lululemon. Now Lulu, I'm waiting for a pullback entry, but nonetheless, it's a good looking clean squeeze that unfortunately, unless it does pull back, is starting to take off without us. But I still wanted to show you guys this one because it's a good clean example. Squeezing, we're above our 21 EMA, bullish momentum, stacked, moving averages. Now, how about some tech stocks? I know y'all love your tech stocks. Check out Amazon. To me, Amazon has been very ugly as of late. Now, it's getting back above its 21. All right, we do have a squeeze. You got a little bit of bullish momentum coming in here, but you don't have those moving averages stacked positively. So, it looks decent, but to me, it's not picture perfect. AMD. Now, we're talking daily squeeze. The moving averages are stacked. You got a lot of bullish momentum, and we're right above our 21. So there's a clean example. Let's check out Salesforce. Not quite picture perfect. We're under the 21. We're losing our bullish momentum. The moving averages, all right, they're stacked positively, but we got to be strict here. We're looking for nothing but picture perfect examples. Let's check out Spotify. Here's a good clean squeeze. Above the 21, bullish momentum coming in, moving averages, stacked positively inside the daily squeeze. Personally, I wish I took an entry back here, so I will be waiting for a little bit of a pullback, but there's a good clean example. Got a couple more here on the list, guys. Let's take a look at, let's see. Here's a nice one in UPS. So we've actually been trading this over the last couple of days, nice and clean. Daily squeeze, check. Bullish momentum, check. Above the 21 EMA, check. And last but not least, the moving average is stacked, checked. So because our jobs as traders is to just focus on good, clean setups, trading them over and over and over again, and working the numbers, as a full-time trader, guys, here's pretty much my routine. In the evening, I come into Thinkorswim here, I run this scan, looking for squeezes on the weekly chart, the daily chart, the 4-hour chart, and I'm sorting by market cap, and I'm kind of focusing on the upper half of the list here. Those nice, big, deep liquid names. And then it's just a process, guys, of going through the charts here, and is it a clean squeeze or is it not? So you got Procter & Gamble coming up. Not a clean example. It should take you a good 2 seconds to make a decision here. Home Depot, not a good clean example. Netflix, not a clean example. So a couple of duds right there, but I just simply kind of work my way through the list. I drop the attractive ones, the good clean squeezes up here in the watch list, and then it's just a matter of taking those entries. And for me, guys, my entries are usually dictated by where the market is. Typically, a little bit more specifically, where is the market in relation to that 21 EMA, and also how's that momentum looking for the market? Where I tend to get really aggressive is when the market itself is in a squeeze with stack moving averages, trading above the 21 with bullish momentum. That's the time where I really like to get aggressive. At that moment in time, you get the overall wind at your back with the whole market behind you. So that's it, guys. Nice and simple. That's my 4 keys to finding a clean squeeze. I'm looking for a stock squeezing on the daily chart. I need them EMAs stacked positively. I want the stock trading above its 21 EMA, and I'm looking for that bullish momentum increasing on the histogram. So, of course, guys, when I show you my positions here, or my trades rather, this all looks really good. Just keep in mind, it's all kind of relative to account size and position size. Nonetheless, regardless if you have a $1,000 account, 10,000, 100,000, you can make a decision to focus on mastering one good setup, and over time, you can create this kind of consistency. Now, I'll be the first one to admit, I definitely got a losing trade coming sometime soon, because I'm on a bit of a streak right now. So let's see, 1, 2, 3, 7, 8, 9, 10, 11, 12, 13, 14, 15 winning trades in a row. I definitely got a loser around the corner, but nonetheless, guys, in a strong market, in a weak market, in a choppy market, consistent returns can be made by focusing on mastering one good clean setup and ignoring anything else. So hopefully you guys find this video helpful. If you haven't already, go ahead and subscribe, and I'll talk to you all in the next one. Peace out.